Hi, my name is Pita. I'm with Mortgage Alliance. Today we're going to talk about the ABCs of financing. Who are the A's? The A's are the Canadian 6 banks that actually have a presence in your local presence in the corner. B banks are still banks, but they're available over the phone. It's funny that sometimes the A banks talk bad about the B banks, but it's like mama and daughter. The A banks will say to the B banks, to the clients, do not deal with the B banks because they can actually shut down. Well, they shouldn't be saying that because a lot of these B banks are owned by the A banks. So for example, President's Choice, which is a B lender, is actually owned by CIBC. So unless CIBC shuts down, the chances of President's Choice being around will be for a long while. Also, people have to understand that on the B side, you can actually get better rates than on the A side. Why? Because they're not paying overhead costs. Their costs are significantly less than on the A side. So they're in a position to actually compete for your business. Also understand on the B side as well that there is B2. They're still banks, but they're called Home Trust and Equitable. That means that if you're actually not able to get an approved on the A or the B1, you can get approved on the B2. But the rates are slightly higher than A and B. Now, if you're not approved on the A, B, then we go to the C, which is a private mortgage through Joe and Maria. And it's funny that Joe and Maria are there to help you, but we tend to badmouth the Joes and Marias when we want a private mortgage. Typically, private mortgages, if they're firsts, are anywhere from 5 to 9%. And if they're seconds, anywhere from 10 to 14%. But if you're going through Joe and Maria for a private mortgage, it's because obviously you were not approved on the A or the B because your income was soft, you had bad credit, or the property that you bought is dilapidated, or you're doing construction financing and need the funds. So thankfully, these individuals exist. But why are we talking bad about them? I guess it's a fundamental thing that we don't like others making money off our own hard-earned sweat, particularly if they're charging us 14%. But yet we can turn to the A lenders and use their credit cards at 14, 15, and 20%. Now, understand that they're here to help you to bridge the gap from a C so you can become an B and you can become an A. So it really depends whether or not you listen to our coaching, and that will actually dictate, are you a C, B, or an A client? Your circumstances will dictate that. Thank you.
Mortgage Alliance.